All right. While everyone gets settled in, again, thank you very much for all being here today. I already see that we have a bunch of people already tuned in online. How are you all doing? Like, give me some emotion. Give me okay, thumbs up there, great, superb. Today's section is actually going to be one of the most practical ones, especially for you. The agenda is quite simple. First, we have one of our board members, Dirts Līcis, joining us, who will be taking you through how syndicate investing works, what is it, and how we do it here in LatBAN. Then we're going to take a short break. We had planned to showcase you one of our portfolio companies, InGain, as a case study for you, but unfortunately the founder is kind of taking some time off for personal reasons. But essentially, we will still show you what we can, but unfortunately, you won't be able to hear from the founder today. But most importantly, we have pre-selected 4 great startups who will be here presenting to you. And it's going to be a very practical opportunity for you to kind of ask those questions, to kind of practice this founder-investor connection and kind of get to know the project even more. But yeah, pretty simple about that. But yeah, there's also some changes in our schedule for the remaining sessions. So this was the original schedule. We had planned for the 4th session to be about exits and being a value-adding investor. However, with some changes, the exits are pushed to the 5th session on the 29th October. And we have replaced the exit theory session with one of our members who's going to be sharing his recent exit story, which is quite impressive to hear. I haven't heard it myself, but he says it's a good multiplier there. But that's about that. We have 2 speakers today. Ancis, raise your hand. You already met with him. And Dirts Līcis, who already just mentioned. But essentially, I guess, Dirts, I can give the floor to you. And let's give him a round of applause. Yeah.
Yes, good afternoon, and it's a pleasure to meet you, so many of you, in our conference room this afternoon. And like it was told, my name is Dirts Līcis, and I'm the board member of LatBAN and also one of the members of ASP Asset Management, the company via which we are making our angel investments into different startups. And these are the presentation. The slide just shows into the startups that we have made investments during the last 3 years or so. So altogether it's how many? 11? Yeah, 11 startups, and we're just signing the last contract with Rebookify just basically either today or tomorrow. But in short, what is a syndicate? And before I start telling you about the syndicate, I would like to ask you, how many of you have made an angel investment into some kind of startup? Maybe you could raise your hand, which is 1, 2, 3, 4 people. And here I would like to start with a quite controversial statement that investing, that is just my opinion, that investing into startups as an angel investor is more or less like a casino. That means that you can win, you can lose, but you can't really predict beforehand which game or which play will make you a profit and which not. And that is very important why you distribute your risk and why you make investment into several companies. And returning a little bit to the statement about casino, a little bit off track before we start about the serious stuff is that in casino, I just did some small research today that the house wins by only mere 6%, which means that house has an advantage over players of 6%, and the lowest and the percentage varies from 6 to 15%, and the lowest this coefficient is in Macau, which is the largest casino chain in China, and the turnover is 10.9 billion with B. And so if you want to play the games, the biggest probability for you to win is blackjack, roulette, or baccarat. I have no idea. I've never played in a casino, so I have no idea what is baccarat, but maybe some of you know what it is. But if I make analogy with casino and startups, there are probably several reasons why people go to casino or why they invest in startups, and they're very close and very similar. And the first one is my first investment. It was just for fun, because I invested in a company which I thought that the idea is really cool, the founders are really great, and we will change the world. Well, it didn't happen that fast, and well, it hasn't happened yet. And I've grown a little bit smarter by now, and have learned from my own mistakes and from my own money how not to do things. But the other thing is that first thing is that you have fun. The other thing is that you go and try to make some money. And obviously, in casino, like if house has 6% advantage over you, then most probably you will, at the end of the day, you will not make much money. But there are people who do make money, and how do they make money in casinos? And most probably you have heard about people such as big whales. And big whales are people who come in with big amount of money, and they play games. And most of the time they do win. Not always, but many times they do win. And I just wrote out some cases that the latest one was just in 2025. In Wynn Resorts, they reported the first quarter results of much lower than anticipated profits, just because of a couple whales who came to the casino and just so to say, stole the house. And how does that happen? That doesn't happen just by pure luck. That happens by working. And working in what sense? They work in a sense that they pool the resources. There is just one guy playing, but behind that guy is a psychologist who teaches that guy how to behave. Behind that guy is most probably a team of very good mathematicians who teach you the probability theory. Behind that is a psychologist who tells you how to read the other people's reactions, how to count the cards. There are mathematicians who evaluate the games. Where is the biggest probability that you will lose, that you will win and the house loses? And what is most important, behind that guy, there are a lot of lawyers' hours who work with the casino, because the guy, the big whale, is not playing the ordinary game. He's playing a game where the odds are even with the house. And it is a much bigger probability than for us, ordinary people, putting our 10 or 50 or 100 euros on the game, because they're paying hundreds of thousands, 1 million for one bet. And this is exactly the same story about syndicates. And the difference if you invest as one angel investor or if you invest via syndicate. You invest totally much bigger amount of money, but your own risk is much smaller, and you can diversify much more. So returning switching from casinos to startups and syndicates. So what does syndicate mean? A syndicate means that several angel investors come together and they invest their own private money into one project, like Rebookify, that is the last one that we're investing in. And they're pooling their capital, and the investment is being made as one person, which is the syndicate. The lead investor coordinates various things, which is starting from sourcing, which is startup sourcing. So when you come to our sessions, then every session you can see that we have 4, 5, or 6 startups which give presentations, and those startups are initially being selected by Emils and then being verified and cross-checked by Ansis and me, and only then they come here to our LatBAN sessions, and they give their pitches. Then we do the due diligence, which means that it is not only how nice the pitch looks like, but we do behind the scenes investigations, which is starting from checking the people themselves, who they are, what they do, what they have done to whom, and stuff like that. Then we check different business metrics. Is the business model possible? Does their business model make sense? Are the expenses appropriate? Are the sales prices or sales periods appropriate? Then we negotiate the terms of the so-called term sheet. Term sheet means a contract that we talk with the startups about conditions under which we invest into each startup. Then the close, which means the closing of the contract, and in many cases we, the syndicates, are not the only investors. We work together also with the other funds. We work together with other angel investors who come individually. For example, for Rebookify, we invested together with one of the biggest accelerators in the world, which is Global 500, which is American accelerator, and so we had to negotiate with them about the terms. And if you are investing as a small private investor, even though the money for you is big, let's say 20,000, that is quite a big investor, or even 55 or 50,000, you cannot be on the same level as a syndicate, because a syndicate just puts together all these investments. So what does LatBAN provide for you when you come here and when you listen to the pitches? So LatBAN provides you a platform where the startups can apply, because they know that we have such syndicate. They can apply here. They know that they will be able to present, and they know that there will be 20, 30, 40 people, and that we will distribute their project through our network. On the contrary, you have to be very, very, very active business angel for the startups to find out about you and come to you directly and spend their time and explain what their business is and how they will work and what they will do. So here they can do it to a pool of people, 20, 30 people. We provide also visibility, like you have seen. There are different advertisements, information about the startups. We provide the structure so that they come here, then after pitching you can express the interest, and the interest from most investors or angel investors. In that case, we just work with the startup. Then co-investing with other networks is possible. Like I said, with Rebookify, we invested together with Global 500. We have made investments where we have invested together with LatBAN. In InGain, we invested together with with Trind Ventures, which is also a venture capital company. So it is not that we are the only investor, but for the companies, there is a very big advantage that there are not 20 small separate investors, but there is only one investor, because for the next investment round or for the sale of the company, it is much easier to deal with just one contact person, which is Ansis or me, than to deal with 20 different separate angel investors. And most probably 10 of you will be somewhere on vacation and will not be able to reply to emails and to sign the contract. So it is much easier for the next investors to come into the company, because they know that the ownership structure is not very it's not fragmented, it's very solid. There are one or two investors that they have to talk to, and those investors actually do know what the contract terms are and what to expect from the contract. And so that is the outcome, that we get one clean entry on the startup's cap table. Cap table means capitalization table, which is the ownership structure. How many owners does that startup have? And for example, if you look at some famous companies like Amazon or Tesla, there are thousands of different owners, and so many people. It's not just one Jeff Bezos or Elon Musk who owns the company. There are thousands of such companies and of owners, and they have also like special meetups where they can make different changes. So at LatBAN, we have a special legal entity, which is ASP Asset Management, how we make our investments. And why syndication matters for angels and for founders. So there are benefits. It is access to better deal flow. Like I said, that the best startups many times do not publicize that they're fundraising. They just come to certain venture capitals or venture capital companies or big angels and just provide private deals. There are on the second round, quite often startups choose their investors if their performance is very good. Then many times you just even do not know that they're raising money, and because they are selecting those investors, so-called smart money, which can not only give them the money, the capital that they need, but can also give them the access that such venture capital provides. And for example, in Rebookify case, they went for a Global 500 accelerator because it is well known, one of the biggest accelerators in the world. And why they did it is that via such accelerator, they got access to North American market. So they are going through accelerator program. The program teaches them how to enter the North American market, as well as they connect with industry insiders from that country. The same is, for example, Adventum Tech, a company which manufactures, it is a spin-off from Riga Technical University. They manufacture different sensors which measure the concrete, the strength of the concrete, the fatigue of the concrete, the movement of different bridges and stuff. So they're using, we also help them to get access to TBDC, which is Toronto Business Development Center, which also has a so-called accelerator program where they go and they participate. And for participating in such a program, they're getting different networking contacts, and they're going, I think, beginning of November, and they already have a meeting set up with the Canadian Rail, the very, very big, enormous company, and they're targeting that they will do the pilot project with such a Canadian rail company for monitoring the bridges, sustainability of bridges, and they will measure how much what is the deformation of bridges when trains just pass by. So in that way, they get also networking from our side. So the syndication advantages are also like the diversification. So you don't have to invest very big tickets. You can start with 5,000 euros that our members invest. And in that way, you can invest in more deals. Because like I said, angel investing is like casino. You can't invest just in one deal. You have to invest at least in 10 deals just to make some kind of the mathematics work. It's the mathematics of numbers. And then what is also like a very good advantage is that shared expertise. Many times Emils picks the company and he has no idea what they're doing, and I have no idea. Ansis has no idea, but we have close to 100 members. For example, we have a company in our portfolio, Cellbox Labs, and I have absolutely no idea about biotechnology, organs and chips and stuff like that. But fortunately, we have some, I wouldn't say doctors, but people from medical sphere, so they could help us and they could explain us what that technology means, how it is applicable, is it sellable or is it not sellable, and they're still consulting us and helping us with that. So in that way, we get expert area expertise in doing due diligence. They also connect us to their network, sector experience, and then the work is much more valuable that we do. And the founder win, like I said, it's also very good for them because they have to work only with one contact person from our side. And then we deal with all the other investors, which means that we can, just because you have to coordinate the contract and the conditions with just two of us or three of us, then it is a faster close and faster signaling that we are closing the deal. Then roles and responsibilities. So the investors who lead the deal are called the lead investors. So Ansis and me and Emils are being called the lead investors. So lead is because we, so to say, own the investment memo. We make the investment due diligence and we deliver it to people. People do not have to do their own market research, although we encourage and we're very happy that somebody comes and tells us you might not be right in some kind of area. And then we prepare the due diligence pack, what we will show at the end of the presentation, how does it look like. And we have developed a template of due diligence pack so that for people who regularly read them, it is easier to read because they know in what sequence, what subjects and what things we are looking at. We also advantage of doing the syndicate is that we can also negotiate the terms. And Ansis, as a lawyer, has experience in legal side and legal stuff. So we also know what the other startups have been previously requiring, and we also know the different obstacles and different problems that we have from other startup companies. So we included every new contract has new clauses that we have met with working with the other companies. And then we aligned our requirements with the group, which is angel investors. And so we drive the closing, so we make all the negotiations, all the meetings, all the follow-ups. We make post-close reports, and we also represent all the syndicates. So it means that the members, the ones who invest, the small angels, do not have to go to all the meetings and require the monthly reports. That is what we do. LatBAN and core networks. You can always also come and check the previous reports from previous companies, just to look from the perspective of the past, what was the information that we had before we invested and where the company actually is, and just make your own assumptions and your own decisions, how precise it has been. How does the syndicate process just goes on, and how does it happen? So the first part is sourcing and quick qualify. I should say a very big thank you to Kirill, who just made such a big community for us, because some 5 years ago our startups were not so active, and they were not coming here and pitching and presenting. But at the moment we have a quite good deal flow, and we get 30 to 50 different projects every month that we review. And at the end, about 4 to 6 companies are actually pitching in front of our angels. Then those 5-6 companies which have been selected, they pitch to LatBAN members, and they explain their business, and people also can ask for various questions. And then those startups which have indicated the most interest, we do the due diligence, quick check if it makes commercial sense, what is the team, what is the legal aspects, and after receiving the standard form from the startup, we just after the form we just ask some additional, more in-depth questions, and in that way we finalize the due diligence. Due diligence usually takes from 1 up to 3 months, depending on how difficult and how complicated the project is. And contract signing also takes from 3 to 4 weeks usually, and the smallest details are usually the hardest and the longest. So term sheet negotiation and commitments formalized. So term sheet means what we require from the company, what KPIs we're expecting. So for example, for Rebookify, today we were discussing about the KPIs, which means how many new clients they will acquire every month, what will be their revenue growth. So there is some certain percentage written. So that is what we follow if they are following and implementing what they promised. Then step 1 is SPV. SPV is a special vehicle company. So we have a main fund, and then we make a sub-fund for investment into a particular company, and that is what ANSYS is usually dealing with. Then when the sub-fund has been established, then those investors who have committed for the investment just do the onboarding, and onboarding is being done automatically via ASP homepage. And you have to fill out the Know Your Client, all the AML standard procedures, which is required by the Bank of Latvia. And then it ends with the instructions. When we sign the contract with the startup, then it ends also, we are sending out the wiring request or the bill to the separate individual investors. Then step 6 is close the funds, and then when all the investors have transferred the money to the SPV's account, then we transfer it next to the startup. And then we start, then the most interesting part starts working with the founders, following their strategies, their business, and then monthly follow-ups. And then post-close is the reporting. So there are startups which report to us every month. There is, I think, one which is very stubborn and reports to us just once per quarter, once in 4 months. And but we keep those reports quite regular so that also you would have the information about how the company is doing. How much time do you have? Yeah. So the due diligence checklist, the standard terminology or standard things that we're checking is, first of all, founders and the team. And we consider that it is better to have a very good team but not very good product instead of having a perfect, brilliant product but not so very good team. Because even a good team can make a shitty product quite good, but otherwise, unfortunately, it doesn't work. Then we validate the product and the technology. So a roadmap, how you will implement security IP, which doesn't work for software companies. Software companies, unfortunately, can't IP. IP is intellectual property. They can't protect it. We check how unique that product is, and quite many times we realize that we know about the product's competitors more than the startup knows, and that is also not a very good sign. If startup knows about their product much better about their competitors, then it's a very good sign. And what is very important for us is scalability, so that the product is not only locally being able to be sold, but it has to be sold worldwide. So at least Europe, Asia, we're not even considering Baltics as a scalable market. So also integrations with other products. So we check if the pricing is right, if the competition, what is indicated is right. We check sales and go-to-market strategies, customer acquisition cost, which is CAC, the sales funnel, retention, so that the sales growth is realistic and so that in similar industries it is also the similar rate. Then churn rate means how many customers just buy once and then do not continue to use the product or not pay for it. We check if the indicated market size is correct for the product. For example, we had, let me check, for example, for Rebookify, in their presentation they said that the entire travel market is, let me assume, like 1.8 billion. But they're just rebooking the hotels, so it doesn't mean that they're into the entire travel market, which is overly exaggerated. So they are only into the hotel booking market, and not even into hotel booking market. They're into agency hotel booking market, not even the private people's booking market. So in that way, you just squeeze it to realistic market size and understand what proportion of the market they can really penetrate. Then we check the legal aspects, shareholder agreements, because before investing we want to make sure that the shareholder structure is very clear, that because the next investors after us, we're thinking about them, so that the next investors after us who come in, they already have clearly prepared legal structure so that they wouldn't have any obstacles or disagreements about the shareholders. Then we check, of course, if IP is registered, if it is not finally secured, if it is in progress and stuff like that. Very important for startups is employee option pool, which is the pool which can be employee shares, which can be given to the future employees in case if they hire such. Then we check the business models, margins, how profitable the company is. We check the financials, burn rate. Burn rate means how much the company is spending more than it is making money. Then example questions to startups is, do you have a working MVP, which is a prototype? Because many times the companies come just with an idea, but they haven't really made a product by itself. What is your customer acquisition cost and how fast do you recover it? So many times we get a reply that, okay, we will just sell it via Google Ads. But if you can do it, then somebody else can do it as good as you can. Or we can sell Google Ads cheaper than the others. Well, how can you do cheaper? If you can do it cheaper, then somebody else can do it cheaper. So what is your, so to say, secret sauce? How do you defend against platform risk and large competitors? Because most probably you have heard about AI hype, artificial intelligence hype. So everybody comes in and says, our artificial intelligence engine is so much, so unique and nobody can replicate it. And then ChatGPT comes and makes what was with this video graphics AI with Sora or Sarah or Sora, yeah? So they come and they make such a graphic tool that half of those businesses go bankrupt. So you have to really anticipate if somebody from the big guys cannot easily copy you. What are your churn expectations? Because not all customers who come and who are initially happy the first months or the first half a year will stay your customers. And what KPIs do you track monthly? What is your go-to-market strategy? How will you penetrate the market? Because if there is a market for your product, nobody from your competitors is just going to give it away, just like, come on and take it. You have to fight for it. So how do you get that market? And how long is the sales cycle? Because many times the companies underestimate how long will it take to sell their product. For example, in our portfolio company Cellbox Labs, they anticipated that their sales cycle will be maybe 3 months for those machines which grow human organs. Apparently now, after some time, they have realized that their sales cycle is 6 to 9 months, which is 2 to 3 times longer than they anticipated, which had to be anticipated in the financial model. Yes, you had a question? Okay. And so this is standard investment opinion, and like I said, we make it with the same bullet points for every company, so that people who read it, they could. This is just like an
just a note.
Work in progress.
I will be sharing the template for you to actually take a look at later on. But yeah, the idea is that it's kind of standardized sort of for all startups that we do the due diligence on in terms of syndication. But yeah, it covers the team, traction, business model, pretty much all the things that we mentioned in the presentation, and it comes as a part of the package that we distribute to other members, where we also include the financials, cap table, etc., etc. This is like more of a, we call it our investment opinion, sort of a memo.
And such opinion is being made only if we are the only investor. If there are other investors like big venture capital funds, then of course such investment memo can be up to 20, 30 pages, and it is being prepared by lawyers, by financial people and stuff like that. Our financial opinion is, I don't know, it depends, like from 3 to 5 pages on an average, but the structure is always the same.
And later on, we will also be showing you an example of a venture capital fund's due diligence report, which is 40 pages long. We won't go through all of it, but just to get an idea on how much deep dive do they go into. Yeah. Right?
And yeah,
What about confidentiality? Are you allowed to share these timesheets with us? Usually there's some confidentiality clause.
it is being shared only with the guys who have expressed interest into the particular company, and that is also another thing that we discuss with the company. If there are some items that they do not want to disclose to wider public, then each investor signs NDA, non-disclosure agreement, and then we have a conference call, and then they explain some things, but these are not being distributed in written form. Yeah. But of course, there are things that can be told, but cannot be distributed, of course.
No, she's here.
That's yeah. So how does just to finalize about the investment vehicle? So how does it happen? So investors transfer the money into the investment fund, and then the investment fund transfers them into company, and so the investment fund just is the only, or just as one investor. For becoming an investor, you just sign on the fund's documents, which is subscription and shareholders agreement, which you usually receive before investment. And then it also comes, of course, all the work comes with the administration fees. So usually it is 2% yearly management fee, up to 20,000 investment, then 1.5% 20 to 50, and 1% of 50 or more investments. But I would strongly encourage, if you do start investing, then even if you're very, very damn rich, then come with only very small tickets. Don't do the mistake that many of us have done, that you believe in the project so much that you invest a little bit too much and then have many sleepless nights. So it's better to work together with already experienced angels who have already made deals. It's always you learn faster if you invest your own money, but don't invest that much. That is my very, very warm advice from my own experience. And then in case of liquidation means that the company, liquidation is two cases. Either the company goes bankrupt or the company is being sold to somebody else. So liquidation is not necessarily a bad thing. So in case of liquidation, if there is a profit, then the LatBAN, the fund, charges 10 to 15% above 7% IRR. IRR means terminology, so the percentage, the revenue that you make every year. So 7% is free from any commissions. Then what is also important is that the fund is tax-exempt vehicle, so it means that the fund itself doesn't pay any taxes. So all the profit that is being generated from exiting from the startup is being transferred to you. So it is better to consult some kind of tax attorney. So because as an individual, you would probably help me with that, but as an individual, you will have to pay the capital gains tax. As a company, you have to pay only tax on dividends, not the income. Yes, you had a question.
Oh, just was a question, because you have to pay the capital gains tax, and if it's dividends from the funds, and every you have to pay.
It's not the dividends from the, yeah, it's capital gains tax, yes. So the disadvantage of investing as an individual is that you pay capital gains tax in case of profit, but you can't offset your losses, which you can, of course, do it in case of if it is SIA or legal entity.
Oh, so this management fee is something that we as investors need to add every year?
Yes, yes. And that is what the management fee covers the work with the, or monthly work with the startups and monitoring and reporting and
plus administrative costs that come with central bank, with the licensing of central bank of
licensing
Latvia
and stuff, yeah. Such
These
expenses.
costs are also included in this management fee, or it's extra?
No, that is extra. That is what. No, that is the due diligence is being done from these 2%, but from the other projects. You don't have to pay anything for that. No.
And if I become a sort of member of this, let's call it fund, because it is a fund structure, as a legal entity, Latvian legal entity, then basically proceeds coming out from the fund, I can, but if I don't distribute as my legal entity dividends, I can basically reinvest.
Yeah. That is how.
Defer the corporate income tax.
Yeah.
So doing. So this why I suppose that investing through the or via this Latvian legal entity.
Yeah, that is how I do it. Yeah, exactly.
And the 7% IRR threshold, that's applicable to that specific deal, not the.
Yeah, the specific deal, not the entire portfolio. Yes.
Am I anticipating my question maybe? But how do you decide when to exit?
Well, we decide when to exit. We get a proposal either from another fund which would buy us out, but we just put it. We just send a memo to our investors into that particular project, and we just ask, what is your opinion? Should we exit now? And this is pros and cons. And then if the majority says that yes, it would be advisable to exit now, then we do it, of course.
Weighted majority? Like average majority or weighted by shares?
We answers we have to ask you like what is
in terms of exit the majority counts as by shares or the amount of participants.
Shares.
Yeah, it should be waiting.
Yeah.
Ta.
I was wondering,
Yeah.
just to understand what's the intake from the management fee? What's the capital that you have raised and you're operating? I mean, the basis for calculating 2% fee. At this point of time, is it like all the companies that you?
All the syndicates together.
Yeah. How much is it? So
All the syndicates answer was I think close to 10 million, no?
Okay. So your intake is 200,000 a year, just like from the management fee right now.
I do not know answer you know much.
Because this is also important to understand that this
Yeah.
doing completely pro bono. I mean, this due diligence and all the other stuff takes time. I mean,
Yeah, of course it does take time.
how
Yeah.
motivated you are in pursuing what you're doing.
Well, we're motivated to get more projects, and of course, nobody is here just for fun.
But is it like real 10 million already invested?
What is it?
The situation with the company is that total assets under management, yes, have grown to 10 million. But in, the share of investments of startups is approximately slightly more than 2 million. Right now. Signed amount, not invested, is about 3 million.
Invested, so it means that
Yeah,
No, that's
in
signed.
practice, invested is slightly more than 2 million right now.
Okay, so it's 40,000
Yeah.
annually that you get from LatBAN gets from management.
Because we get this management from the paid money. Because we also sign contracts with options, and options means that we agree to invest, let's say, 100,000. Today we invest 50,000, but then we have an option to invest 50 more. So this signed is 10 million, but actual paid in is 2. Yeah.
It's inside. Okay. So we have
And
made already.
does the rest of it sits in the SPV?
No.
It's not collected from investors.
No, it's not collected yet, yeah. Because it is just an option. It means that you have agreed that you have the right, but not obligation to invest.
Technically and practically, if the founders use all the commitments, then like quickly.
Well, it is also for our protection that we have signed that we have the right to invest, but if they're not doing good, then of course we will not invest it. Yeah. Well, it is more in our favor because we can or we cannot, if we want to.
So from legal point of view, those are flat words. You can not do a commitment. You can escape.
Yeah, but it's also a benefit for the startup because they know that. Yeah, they know if they are performing well, then they will get money. Yes, Thomas.
Can you go back, please?
Sorry.
What is IRR and what is the word carry?
Carry is a commission that, and IRR is the percentage, the interest rate that you make every year for the calendar, exactly for the calendar year, which is 360 days. Because if you invest at, let's say, 5% for 6 months, and for 6 months you get 5%, then IRR is 10%. That is the interest rate fixed for 1 year. Yeah, because to compare the interest rates, you have to have the same time period to be able to compare, because 6% in 6 months and 10% in 12 months, you can't really compare them. You need the same time value.
But it's still not clear who pays who that 10% carry above 7.
That's what the syndicate, the participant, pays to the fund.
You will get the profit.
It's after exit.
Yes.
Yeah, it's after exit.
If there is profit, then 10% goes to the fund. If it's
You look back at 5 years, for example, take out the 7% per year.
Yes.
And then you look at the real value and profit. So to speak.
It's profit share, basically. Carrying.
Yeah, that's profit sharing. Yeah.
better liquidity.
Yeah, and I forgot about liquidity. So if you invest as a separate angel investor, so you have invested in a particular company, so the only way how you can exit that company is when the company has exit. So when somebody buys that company, the advantage of the the fund is that you can sell your share to somebody else. If you find somebody else who would like to buy your share, you can easily do, because the startup itself even wouldn't notice that you have sold your shares to somebody else, to your friend or to some kind of other business partner, because the owner of the investment is just the SPV. Otherwise, you would have to go to the register of uzņēmuma registers, register of companies, and you would have to get all 30 or 40 signatures that you are allowed to exit the company, which is quite a big legal work. Yes, and so concerning Thomas, your question, so. For example, if you raise 300,000 at 5 million pre-money. Pre-money means valuation before investment. So post-money, after investment, it is 5.3 million. So LatBAN Syndicate comes in with 200,000, consisting of 40 members. Each member puts in an average ticket of 5,000 euros. So after a couple of years, you exit at a 25 million post-money. valuation. So the SPV gross multiple is 4.7. So after administration and 15 carry, which is a commission, net investment is 4x to the investors. But you will most probably send a slide so that people can calculate it at home by themselves. And I think that was. Yeah, I think. Yeah, and I think this is just. It's not only that it's only very, very good things. It's also things that we have to fight and argue into the fund themselves. Is first of all, it's poor reporting discipline. That every month we have to remind startups that they have to report they have to send their monthly report.
Even in bad months?
Even in bad months, not only in good months, especially in bad months. We have some problems with legal gaps, that we have a convertible loan, which means that the loan is being lent as a money, and then after some time it is being converted into the shares. So sometimes it takes longer than anticipated for that loan to be converted, because that has to be registered with the uzņēmuma registers or Register of Enterprises. Then misalignment between startup and syndicate investors, which means that syndicate has a different strategy of how to continue their business, and those who have invested their money have a different opinion. And things which happen quite often is a change in business strategy, that company just figures out and realizes that the strategy what they started or thought about initially doesn't quite work, and they have to change a little bit or sometimes completely. Well, that is why we have a contract, and with every investment it's becoming longer and longer, and we anticipate the previous obstacles and mistakes that we made, and it is negotiations that we talk with them. Yes.
I've noticed that there is a lot of focus on the financial, the legal, let's say the good governance of the deal. I come from other country, when it's a matter of angel investment, I noticed that there is a lot of expectation from startup, not just from winning the money, but winning the competence, winning the experience from business angels. How does LatBAN support startup with such an approach? Because I'm business angel investor, I'm advisor, but today you see me as a pitching guy. I could not resist on one startup, so I become the CEO. But as a startupper, I expect a lot from Business Angel Association in terms of support, to giving me that vision of the market, that understanding of the competition, also of those little leaders that maybe cannot be in my hands, and I especially think about those younger founders. And this is very important. I mean, the more you go forward, the less this component is important, because then you walk on your legs. But in the very beginning, Business Angel should support a lot the startup, and I would like to understand how LatBAN addresses this point.
Yeah, you're absolutely right, and that is the reason why many startups come to us, because we offer not pure money, and that is the biggest mistake that a startup can make, just to take the first money that you can get. But they come here just for the expertise, and like I said, we have close to 100 members, and just now there was a case a couple of days ago with one of our startups that they had a legal question, not legal question, but a tax question, like how should we move to the right, to the left, and what tax consequences we have. And thankfully we have a member who is specializing in tax questions, and so we could solve that problem like in 1 or 2 days. And they were advised and happy, and that is what we value as much as money, as investing money into the startups.
Okay. Okay, sure.
I was wondering if you're right about 2% out of 2 million, it's 40,000. Probably doesn't cover all your costs because you did just too little for the midterm. So what are other sources of funding LatBAN has?
Just to differentiate, the investing itself, it isn't connected to LatBAN as an organization. Yes, it's ASP Capital. So we are just, as a LatBAN organization, we're a non-profit, Ministry of Support, and yeah. Yeah, non-profit. Yeah. But okay, thank you. Round of applause to Girts.
Yep, thank you.